But my point is,
I didn't blame you.
a central bank is a socialist concept. Having the government fix a price is a socialist concept.
The Fed and central banks around the world have done some of the worst things, and we all have to pay for that. Don't think that we have already settled the scores during the market crash of 2008. It was just a spillover. The reality is that every 5 to 10 years, we are going to see the same market crash. The reason being the central banks. Peter Schiff, CEO of Euro-Pacific Capital Incorporation, author, stockbroker, and economist, says that now the central banks should stop existing. His latest interview at Traders Summit revealed what the central banks have been doing. And believe us, what he said about the next few months is really frightening. In this video, we will uncover what Peter Schiff said about the central banks, money, and the dark fall coming really soon. Let's get started. Analysts know that economies are seeing some of the worst forms of decline. Everyone knows that the Fed, in the case of the US, and the central banks, in the case of other countries, are somehow responsible. Therefore, when Peter Schiff was asked about what the Fed did wrong for decades, his answer was no less than a treat to hear. Listen to what he said.
Every step was a misstep. And it's not just the Fed, it's central banks all around the world, although the Fed was kind of the leader and everybody else followed along, kind of like we were the Pied Piper of monetary excess, and everybody else kind of marched along. But the world would have been much better off without central banks. I mean, not that it would be better off if the governments just had the direct, printing press, but we would have been better off had money been created in the private sector. I don't think the government should be involved in money at all. I think the market should determine what money is, and people should transact in the monetary units that provide that function the best. And to the extent that governments need money to provide services, they need to acquire it honestly through taxation. The government should not be empowered to just artificially conjure money into existence out of thin air.
Well, yes, Peter Schiff is an economist who knows how economies should be run. He knows what atmosphere countries should create to flourish their economies. However, he seemed quite disappointed at what the Fed has been doing for years. In his answer, he said that the Fed always did exactly the opposite of what should be done. For example, when it was good to let the interest rate hike, the Fed decided to lower them. When companies went bankrupt, which was good for a prosperous economy, the Fed offered them loans. But those bankrupt companies become the blood-sucking bodies that would never perform perfectly in the market. Peter was so dismayed at what the Fed had been doing that he said the central bank should be wiped off. He said that money printing shouldn't come under the government's authority because, in this way, they can print as much as they want. He emphasized that the private sector should print money whose value would be determined by the free market. Governments would get the chance to manipulate their currency's values directly, and that's what we need to avoid collapses and recessions. He said that the governments could get money for welfare and to run the country by only collecting taxes. That way, governments would be at the receiving end, not the printing end. When the private sector is in charge of money printing, inflation, recessions, collapses, and crashes won't be there. Guess why this would be the case? Well, when no one abuses the markets and economy, there is no chance we will go near collapse at all. Here's a little reminder to like the video if you were loving it. And if you don't want to miss videos about the ever-changing financial market and evolving economics, subscribe to our channel. Let's continue now. But who would decide the interest rates? We mean, when there won't be central banks, someone has to decide the rate at which loans would be offered, right? Listen to what Peter Schiff said about that.
Nor should governments be in charge of setting interest rates any more than, we don't want governments to set the price of bread or the price of gas. All prices should be discovered in a free market, and that includes the interest rate. But I think because of what central banks have done, the Fed and others, by keeping interest rates artificially low, which is at a level that is far below where the market would have set them, and by inflating the money supply to the extent that they did, they really helped undermine economic growth throughout the world. They helped to grow government. Governments are a lot bigger because of their relationships with central banks. And of course, that has made the world poorer because the smaller the government, the wealthier the people, right? Because the government is taking resources away from the private sector where they could be used efficiently to, grow living standards, and usurping them for public consumption, which is a way of squandering your resources. So central banks have helped create big government, which has been a drag on global GDP, but also by artificially suppressing interest rates, they have helped create massive malinvestments, misallocations of resources, financial bubbles, all sorts of problems that we're now just beginning to feel the consequence of, and they have unleashed massive inflation.
Well, Peter Schiff categorically said governments should not be in charge of setting interest rates. Rather, the free market should determine it. When the market sees more people want to have loans, the interest rates will increase, and when fewer people want loans, the interest rates will decline. There is no rocket science involved in it. However, the central banks don't work like that. They control the interest rate and thus become a reason to disturb the free market. When this happens every month, a pressure cooker starts to boil and bursts after every 8 to 10 years. He also said that the price of commodities should also be determined by the private sector, which will take the authority from governments. That way people would get rich, instead of governments being rich. He warned that we are at the tip of the iceberg right now. Listen to what he said.
Again, we're at the tip of that iceberg right now. So what we've experienced in the last year or so, this is just the beginning of what is coming. There's so much inflation in the pipeline already. Yes, they really went overboard after COVID, and we've barely even felt the full effects of that yet. But that just capped more than a decade of inflation by central banks, 0% interest rates, negative interest rates, quantitative easing. And so we're just starting to feel the consequences, and they're going to get much, much worse as the months and years.
What happened during the market crash of 2008 and COVID-19 was nothing. A lot more is coming. The reason for that is now, the size of economies has grown many times. Back in 2007, the U.S. economy was $14.47 trillion. But now the U.S. economy is worth $23 trillion. Also, the Fed pulled the interest rates to the lowest and messed up with the free economy, which created a sort of economic bomb. Instead of making reserves by increasing interest rates, the Fed lowered them, which has not brought us to these consequences. In other words, the collapse will be more deadly, and the rise will be more difficult than ever. But why should we trust what Peter Schiff is saying? We mean, how can the central banks just shut down? How can interest rates be allowed to increase, and the entire banking sector be allowed to become private? Well, Peter Schiff was the person in 2006 and 2007 who had asked the Fed to raise interest rates when the market crisis had not yet manifested itself. Peter Schiff said that the Fed became the body offering loans at lower interest rates to all the firms that were about to collapse really soon. Since the interest rates were kept low, companies rushed toward the Fed, and the U.S. had to take care of all the bankruptcies. He argued that, at that point, if the Fed had not intervened, companies would have collapsed. People would have felt the pain, however, it would have been worth it. What he really wants to say is that if the market was allowed to fall naturally, it could have been the last fall of history. However, the Fed could not resist intervening. It entered the market and tried to maintain it, making it dependent on someone. When you artificially allow the bad companies and sectors to work in an economy, they always take you back to where it all started, a market crash. Peter Schiff said that he was the one who was warning everyone about that. He even wrote a book on that, but the Fed didn't change its policy. And now everyone can see that we are again in the very same situation. Peter Schiff said that now, we are on the brink of a fall that will be more painful than in 2008. At this point, the Fed and governments can decide just to stay away from the market and let things happen. It will be painful for many. However, after the smoky clouds will sit, we will have a collapse-proof market. But if central banks intervened again, we would be captured in a perpetual collapse cycle that will never end. In other words, we have to be ready to welcome a market crash every 8 to 10 years. Listen to what he said.
And all during the housing bubble, I was warning about the financial crisis that would result from the pop. I said, you got to raise interest rates. They're too low. Look at what you're doing to the housing market. Look at this phony economy that's being built on home equity loans and subprime mortgages. And you had Fannie Mae and Freddie Mac that was guaranteeing all these mortgages. that was actually the biggest buyer of subprime mortgages in the world was the US government with their guarantee. And you had all these banks that were being insured by the FDIC. Right. So none of the banks would have got into these mortgages, but for the government, none of these mortgages would have been created. And the fact that the Fed kept interest rates suppressed at 1% and then raised them in these quarter-point increments, that was the problem. And I noticed that. I wrote a book about it in February of 2007. I shorted the subprime market myself in 2006. I encouraged other people to short that market. I went around the country speaking. When Ben Bernanke said that subprime was contained, I said he's blind. I said this is the tip of the iceberg. It's not just subprime, it's the whole mortgage market. So I understood the problem. Now, had the central banks not intervened in 2008, yes, the collapse would have been greater, but it would have been worth it, because the pain that we felt back then, the bankruptcies, the bad actors getting punished, that would have been a wake-up call. Instead, we bailed everybody out, created incredible moral hazard, and now we are on the precipice, more than a decade later, of a much greater economic crisis. And the central banks now find themselves between a rock and a hard place of their own creation. They can either allow interest rates to go up where they need to and allow everything to implode and allow all those big banks that they bailed out in 2008 fail with even worse implications now, or they can destroy currency. They can have hyperinflation. And that, I think, is going to be an even bigger disaster for the global economy, to wipe out the value of everybody's savings.
What do you think? Should governments abolish central banks and let the private sector control money printing? Or do you think we have to tolerate a market crash every 10 years? Comment right below in the comments section. Do you agree with Peter Schiff that central banks should stop existing? Do you want to watch more videos like this one? If yes, then please like and share the video and subscribe to our channel for more exclusive videos on economics, changing paradigms, and the financial sector. Until the next video, stay tuned.